The roots of banking, and we see banks literally on every corner where we go in a town now, but the roots of banking can be traced to really the earliest civilizations, believe it or not. The Egyptians and early societies of the Middle East developed, the banking prototype, which, modern banking is based. Different agricultural commodities used to be kind of used as money. They were stored in granaries operated by the government at the time, and records of deposits and withdrawals were maintained there. Ancient civilizations introduced the money changers who would exchange currency from different countries so that merchants, travelers, and pilgrims could pay taxes or make religious offerings. In the Renaissance era, Italian city-states were home to the actual first banks, which actually mainly were used to finance trade, the state, and the Catholic Church. But in order to avoid the church's prohibition against usury, at that point in time, you weren't supposed to charge usury or interest. The bankers would lend in one currency but demand payment in another currency. So profit was earned by using different exchange rates, which could kind of take the place for charging um, interest rates. So technically, they avoided the usury with just kind of different fluctuating currencies being used as exchange. But nonetheless, the successes of the Italian bankers kind of created a spread of banking further across the continent during that Renaissance age. That's the age of lots of intelligence, lots of new knowledge, lots of inventions. But nonetheless, in England, the goldsmiths were responsible for not only storing gold and issuing receipts, but also for developing what's now what we consider fractional reserve banking. By issuing more receipts than there was gold on deposit, these goldsmiths increased the profit potential of the banking industry. So they actually kind of multiplied money, like will talk about in upcoming in this chapter. From the time of the American Revolution to the Civil War, the United States saw an expansion of relatively unregulated banking that helped finance the growth of the young republic. Modern banking in the United States traces its origins to the National Bank Act of 1863, which gave the government a means to finance the Civil War. So banks just simply went from places to, we'll store money for you, we'll keep tabs of receipts or deposits or anything like that, to literally becoming ways to finance uh, not just hold money, but to finance, like you saw in the Renaissance era, to finance, discoveries, to finance some of those ship excursions, and actually to enhance trade. And then, of course, in England, you would see how they actually had a fractional reserve banking system. In other words, uh, somebody could deposit gold or money in their banks, and they would actually only hold some of it in reserves, but then lend out the rest. That way somebody could take it to another bank, do the same thing there, and the money would actually multiply. So you were starting to see modern banking in its current form. And we'll talk about fractional reserve banking at a later time. But banks essentially hold and are places where wealth can be stored, but they can also facilitate wealth and trade by providing alternative methods of payments, places where you can get different types of loans. There's just so many different things that banks can do. But the origins of banks, believe it or not, go all the way back to the times of the Egyptians in its simplest form. I mean, they just, again, stored commodities. They didn't store money. They may just simply store grain, and then they would trade grain or withdraw grain to help trade for something else. But nonetheless, these are our earliest banks.